Welcome back. We're about to recommence the forum. The next panel of the day is the Spanish banking and financial overhaul. Is there light at the end of the tunnel? Agostino Fontevecchia will moderate this discussion. Agostino is a markets reporter at Forbes, where he's focused on macroeconomic issues, commodities, and broader financial markets. With a background in economics, philosophy, and sociology, Agostino has attempted to use a different filter to analyze some of the most important financial events of the past few years, where he's paid particular attention to the European sovereign debt crisis. Agostino, welcome.
Thank you so much. And well, I think it's very appropriate. I'm from Argentina, and I'm moderating the panel on financial restructuring and the banking assets in Spain. So I think we know quite a lot about forced nationalization of assets. So that's appropriate. All jokes aside, I think we have a great panel, and I think it's really important because this one, we've had some great panels before, and this one is specifically about the possibilities of investment within the financial sector as opposed to the broader economy. And I just wanted to point out two specific things that I've learned by speaking with my panelists over the past few weeks. And one is that we have a very different and isolated view of these types of crises, particularly Spanish crisis, but throughout Europe, when we're trying to analyze it from abroad, especially from the United States. And I write here in New York, and I read the reports that come out of the banks here, and I'm not on the ground over there. So it's really interesting now, and this is an opportunity for all of us to get an inside view from people that are within the system rather than our external analysis. And the second point that I think we should keep in mind is that last year, a couple of the hedge funds that had the best performance were the ones that were playing the RMBS market, the residential mortgage-backed securities markets. To do a little advertising, a couple of the people on the Forbes highest earning hedge fund managers were exactly the people that were going through these distressed assets in real estate and picking out the good stuff. And so what I'm trying to say with that is that we should keep that in the back of our minds when we speak here so that we can see what the opportunities are that we might be able to find here. So I just wanted to present the panelists. Over here we have Jaime Becerril. He's the expert in European banks from JP Morgan. Right next to me is Marta Gomez. She's from Sareb, the so-called bad bank, which she will tell us why they're actually not bad and not a bank. Jordi Gual, who is the chief economist of CaixaBank, which is one of the most important banking entities right now in Spain. And Fernando Perez Hickman over here, who is the head of Sabadell USA, who is going to be also instrumental in understanding how the crisis and how the banks work there. So I wanted to start with you, Jordi. You're an expert over here in understanding everything from within the Spanish financial system. So I don't want to go back to the history because we've done that, but if you could give us just a quick overview of how the banking crisis originated in Spain and what you saw from your vantage point.
Okay, thank you very much. It's a pleasure to be here, and I want to thank the organizers for the invitation. I think that the banking crisis in Spain is intimately linked to two processes. One is the entrance of Spain in the Eurozone in 1999, and the second is the subsequent huge increase in property prices, the bubble. In fact, the property bubble is to a large degree the result of Spain entering into the Eurozone and the huge inflow of capital that came to the country coming from the rest of the Eurozone. That huge amount of funds was channeled through the banking industry and led to, of course, the extreme growth of this industry, and in particular, that part of the industry which we call the savings banks, which were instruments which were not quoted in the marketplace and therefore were subject to more problems of governance. This is at the root of the banking crisis because we had a huge increase in the amount of loans outstanding in the country relative to the GDP of the economy, and a huge increase in the number of employees and a huge increase in the number of branches. The capacity of the industry grew tremendously. And it did that on the basis of funds which were channeled from abroad with a large increase in the loan-to-deposit ratio. Now, when the bubble burst in 2008, 2009, we have gone through a process of contraction of the industry, which I would like to highlight here today. We expect the final adjustment of the industry to be to the order of 30%, both in terms of loan to GDP, in terms of loan to deposit, and in terms of capacity, in terms of employment and branches in the industry. And accordingly, we are seeing already a very rapid concentration of the industry. From 47 players, we are down to 12, 15, and we may end up at the end of the day with less than 10, with the 5 leading players having a market share of about 80%, which is similar to other European countries. And all this has happened, maybe with a bit of a delay, but with radical changes in terms of the regulation introduced by first the Bank of Spain, the Spanish government, and later on with the intervention of the Brussels authorities, or the Troika with Brussels, Frankfurt, and the IMF. We have gone through a memorandum of understanding which leads to the recapitalization of the industry, huge provisioning, and streamlining of corporate governance, bringing all those companies out into the marketplace. I would like to highlight a figure which sometimes is not fully well known. Spain has already had recognized through a P&L or directly through the balance sheet about 8% of GDP. And we have provisioned 19% of GDP. Altogether means that we have funds for a 27% of GDP real estate cum banking crisis. That's a huge number. That's a shield for the future, because if we go back to history, we've seen large real estate crises. I've never seen one that consumes so much of GDP. So I think that the amount of provisioning of the industry as of today, it's more than enough. And we only need, and this was highlighted by Mr. Malo de Molina this morning, we need the completion of the memorandum of understanding, which in particular involves the sale back to the marketplace of the 3 nationalized entities significant today.
When we were speaking before in our phone calls, I was asking you something that is a very American-based understanding of the Spanish financial system. I was asking you about the savings banks, the cajas, and the banks. And one thing that you told me that struck me a lot was that there is no difference anymore. This difference ceased to exist with the restructuring. Can you explain that, please?
Yeah, this has been in 2 stages. The savings banks were forced to get capital in the stock exchange over the last 2 years. In fact, at CaixaBank, we started earlier that process in 2007 when we floated one of our corporations to get access to capital markets. At the same time, increasingly, the governance of these institutions has been strengthened by the Bank of Spain and by regulators Europe-wide. In fact, if you look at the current industry, what used to be the old savings banks, which do not exist anymore, we are becoming foundations this year, you will see a very good correlation between the savings banks that have successfully made the move into banks, which will become foundations this year, and those that gone into trouble. Those that went into trouble were those that had a management which was not fully professional. Those were institutions where corporate governance was weak. Other institutions, particularly private savings banks, which had good corporate governance systems, have been extremely successful during the crisis and are becoming the acquirers in this phase of the crisis.
And one of them is CaixaBank.
Of course, but I didn't want to mention that myself.
Well, thank you. I think that was a very interesting way to see it and to understand that this difference between cajas and banks, which used to be prevalent before, is no longer a reality, or it's becoming something that is not there anymore. And that's really important to know. I wanted to take the conversation now to Jaime. Jaime wrote a game-changing report in 2008, 2009, and was one of the first to begin to point out that the crisis was coming and things were going to kind of implode. And the report he wrote had a lot of, it moved people and it made them realize that there's different connections within an economy that lead to this. One of the things that struck me in the report was the connection you made. You saw unemployment, which was something people weren't talking too much, and you saw it spiking. And is this part of the reason why you knew the crisis was coming? Was it the rising unemployment?
Well, thanks, Agostino, and thank you guys for having me here today. I mean, to be fair, a good friend of mine from Latin America always said, when there is a crisis, there are three people that always get blamed: the journalists, the bankers, and the foreigners. And pretty much the three of them right now, because I live in London, I write about Spain, and I work at a bank. So it is, I mean, when we wrote back then about what was going on, I have to say one of the biggest sources to get the ideas was the U.S. We did look a lot at what was happening in the U.S. We had some Spanish bank back in the day saying Spain is the Florida of Europe. There is a lot of similarities between Spain and Florida. And, you know, there's a lot of things that had went wrong, a lot of things that took too long to be sorted out. But we do think that finally they are starting to really tackle the problems. We see actually the intervention of the Troika or the IMF in Spain is very good news. Because since they came in, we go from very patchy reforms and improvisation to very deep reforms. It is the only country we see worldwide with an enormous restructuring of the financial system. So when we look at opportunities, obviously you have to take this into account. And probably the most useful thing for this support, and again, for that I could probably give a little bit of value on that, is we talk very often to the biggest investors worldwide. I mean, whether it's governments, whether it's institutional funds, hedge funds, sovereign wealth funds, we talk to these people all the time, and we know most of the concerns they have. And most of the concerns were around this sector were usually, we hear always it's about real estate. That's what we see it coming over. If you saw the growth of real estate in Spain the past 10 years, obviously it didn't make a lot of sense. So you compare the population of the economy. But there are other sectors of the economy which are also having a very tough time. When we see the banks getting financed at 0.5% by the ECB and 2% of deposits, that's the cost of funding for them. And then they charge 8% on the SMEs. Some weaker banks, to be fair, in Spain. It's difficult for us to understand that. It's difficult, and it will be difficult for them to explain it to the people and to the politicians. So clearly we have a bit of an issue, and I don't want to go too long, but basically I think the main things we did see back then were the problems in a way too big financial system with too many rational players. And this is also something Jordi was saying. We've gone from 46 savings banks and around 12 banks to around 13 group today. We think there are going to be 6 or 7 banks left by the end of next year. And this sort of concentration, we haven't seen it in many countries. You've seen it in Mexico, you've seen it in Brazil, and even in the UK. But these sort of things, long term makes it a little bit more positive. As I say, we didn't make a lot of friends the past few years, but we were not there to make friends. We were there for things to get done, and they are getting done. So on a positive side, I mean, this is obviously something worth also pointing out.
Yeah, well, we were talking about the restructuring and how the difference between savings banks and banks is being eroded to the point where it's almost not existing anymore. And I thought that it's very important to realize that the level of restructuring that we've seen, and it might be arguable if this is the most intense restructuring we've seen in the Eurozone, or if maybe there's other countries that have gone more bad. But what is true is that we've seen consolidation. So the Troika's involvement, even enforcing a lot of austerity, and the consolidation is a medium to long-term positive for the financial industry in Spain. Can we say that?
Yeah, we can say that. I'm not going to say everything is done. We think that there's a big cleanup pending. I was yesterday meeting some of the biggest funds in New York. We've met a lot of them the past few days. But that cleanup is, in our view, and this is something obviously which the bank doesn't, I mean, I don't represent the bank on this. We represent our opinion. There has to be some kind of support from the government, some kind of support by the European Union, and there was 100 billion euros available for Spain to use. We think they should use all of it. We think they should do like the U.S. They should do like TARP. and that would remove a lot of concerns from the investors. And longer term, that obviously a lot of people disagree with this, but it's either you do this or you go Japanese, and it takes you years to get out of the problem. So we prefer the American way. We prefer to do this fast, and and then I'll talk about the opportunities. But I think there are many, even today. Obviously, this would make it a lot more attractive, the country.
Thank you. I want to ask Fernando now. As I said before, he's the head of Sabadell USA. So they were a medium-sized institution that also had exposure in the United States. And you guys were one of the few institutions that were not one of the so-called giants that navigated the crisis pretty effectively. And from what you told me, international exposure has a lot to do with it. Can you explain a little bit how Sabadell USA helped the whole group and the international exposure, specifically in the US, help the group navigate the crisis?
Yeah. Thank you, Agustino, for having me here and the organization. I will start by saying that Sabadell, and quoting, my colleagues suffer me with some of the quotes that I use from important people. I have a quote that I copied from Winston Churchill that says, "Pessimist sees a difficulty in every opportunity, and an optimist sees an opportunity in every difficulty." Clearly, we've had a tough time. All the banking system has had a really tough time. But Sabadell has become an optimist in this process and has been able to really take advantage of the situation. And the difficulty that we had in the Spanish economy and the Spanish banking sector has given Sabadell an opportunity to go from a medium-sized Spanish bank to become one of the largest, and I'm sure one of the few that Jordi was mentioning before that will be succeeding in the future. Sabadell, to give you a perspective of how this crisis has been a game changer for Sabadell, has gone from around $100 billion in assets before the crisis to more than $200 billion today. Of the 14 acquisitions that Sabadell has done since 1996, 9 of those acquisitions have happened since 2007. 5 of those acquisitions in Spain and 4 in Miami. Sabadell identified the need to diversify from Spain actually before the crisis, looking out to our big brothers like our competitors like Santander, BBVA. They were a clear example of the need and the benefit of diversifying geographically. And Sabadell started that process early in 2007 before the crisis, bought a very small bank. It was the first place that Sabadell had a bank, a franchise, and chose Florida in part for what Jaime was mentioning. Florida is to the US what Spain is to Europe. So Florida was a kind of a proxy of Spain in many aspects, good, and then turned out to be bad. But the reality is that also had around 300 banks, and there was, for a bank like Sabadell that has the expertise of buying, acquiring, and integrating efficiently, it was a good place to be. And it was at the same time a gateway for Latin America. So we started that process in 2007. And during this crisis, as I said, 5 acquisitions in Spain and 4 in Florida in a period of 5 years. That has given, somehow we are still in the process of building the international project. We started late in relative terms to our big competitors. But we are in the right place at the right time, and we've gone from $1 billion in assets to 7. And last year, because of all the allowance for losses that Jordi was mentioning that the Spanish banks had to do, in part because of that, and the positive results of our bank in the US, we were able to contribute significantly to the bank.
Now, one thing that you told me that I thought was really interesting was the synergies between having a Spanish bank in a place like Florida and the Spanish companies that are present there. And we heard in the previous panel about Spanish firms around the world and how they're actually quite relevant, and we see that there's a lot of them in a lot of different places. Can you tell us a little bit about this, how these synergies allow the banks to develop and the companies to develop?
Yep. Actually, Sabadell opened the branch. The first president of Sabadell in the US was in Miami, opening an international branch in Miami in 1993, and 20 years ago. And the rationale for Sabadell to open that branch was to follow its DNA, which is supporting Spanish companies as they expand outside. Sabadell in Spain is one of the banks with the largest market share in trade finance and supporting commerce for Spanish companies. And as you can see, and we've seen in this crisis, that Spanish companies have realized that the internationalization is important for them as well, not just for the banks, but for the companies as well. And they have been able to export know-how to very sophisticated and demanding markets like the U.S. Just to give you an idea of the figures, today Spain is the sixth largest, the U.S. is the sixth largest market for Spanish exports, and Spanish companies represent the 10th largest investor in the U.S. So this market has been very important to Spanish companies, more so during these last few years. To give you an idea how Spanish companies are realizing that the internationalization and the exports make sense in any time, but especially in the time where your local market is somehow mature. 57% of companies in Spain with 250 or more employees export. And that number of companies exporting has grown 7%. So for a bank that does that for a living, supporting companies that export, has been a very good opportunity. Just giving you some idea about the figures in Florida. There are around 900 companies, Spanish companies investing in the U.S. 40% of those, 350, are in Florida. 180 of those are in Miami. And they have invested $6.5 billion of capital and employed or contributed to create employment of 18,000 people. So all those companies, when they land in Miami, they see Sabadell as the partner, because they in many cases, we already banked them in Spain, and we are in the right place to support them when they export as well.
Thank you. And before we go to Marta, Jordi, do you have anything to say about what you see from your perspective about the international exposure and maybe what CaixaBank is doing abroad and how that helps?
Well, yes. In fact, I wanted to go back to one issue that Jaime said, but I'll do it later if you wish.
Whatever you prefer.
Now, since we are talking about the institutions, let me also say that something about CaixaBank, which probably may not be fully known by you guys, by the audience. CaixaBank is the financial arm of the group La Caixa, which is going to become a foundation this year with the new law that is being enacted by the Spanish government following the Memorandum of Understanding. CaixaBank is the financial arm. La Caixa has another important arm, which is the investment that we have in many utilities of leading Spanish international companies. So we internationalize through our presence in the boards of Telefónica, of Repsol, of Abertis, and other companies which go internationally. We, as a bank, have followed a different strategy in terms of international presence. We are the leading bank in Spain. We have the largest market share in Spain in full retail banking, with pervasive presence all over Spain, with more than 6,000 branches. And that has kept us busy. The acquisition of several banks like Sabadell has also kept us busy. In the meantime, we have maintained an international presence through partnerships. That presence is with a partnership with Banco Inbursa in Mexico, where we own 20%, through Bank of East Asia in China, through BPI in Portugal, or through Erste Bank in Austria. All these institutions share with La Caixa a similar philosophy. They may be banks which have a family origin. They may be banks which come out of previous savings banks. All these are institutions tackling the family and households and SMEs, and institutions with social goals. I want to remind or to explain to all of you that may not know that La Caixa, as the foundation, it's a non-profit organization which devotes an annual budget of 500 million euros to the welfare projects, which we have maintained all over the crisis. So we sell ourselves, and I believe we are a different type of bank. And in our international strategy, we have also followed a different approach.
Not going to buy any banks in Argentina, are you? Okay, so now I wanted to ask you, Marta, so what I thought was the best thing I got from our conversation, I said, so Sareb. Sareb is the bad bank. That's how we know it in the United States, but it's not bad, and it's not a bank, according to you. So I wanted you to maybe tell us earlier, like what Sareb is, and sort of the process of like, what do we have there? What is Sareb for the American investor who's not sure?
Well, we are not a bank, and we hope we are not bad. That's the best for all of us. We are a private company that was created in November 2012, and this company was created in order to help to clean up the Spanish financial system. Do you hear me?
Maybe it's because of mine.
Try.
Do you hear me? Or?
I hear you,
Okay.
but I'm next to you.
Okay. Well, what I was saying is that we are a private company. We were created Sareb was created in November What?
Like this. Coach.
Okay, sorry. We are a private company created in November 2012 in order to help to clean up the Spanish financial system. We have in our balance sheet 50.7 billion euros in real estate assets. Those assets, more or less 77% are loans, and the other 23% are what we call REOs, that are property. And we have a clear mission in all this situation, and is the management and the sale of all these assets. And for doing all this, we have 15 years. That's the time period that was established, and we will have 15 years to divest all the assets we have right now in our balance sheet. And probably you will ask me now, how will we sell all those assets in...
Exactly. My next question was, what kind of assets you have, and what will the price discovery mechanism be?
Okay. We have everything. We have 200,000 assets. So imagine how many things we can have in our portfolio. The first thing that I want to say is that we have a business plan that was presented to the market last March. And we have established several targets for the coming 5 years. Between those targets are the divestment of at least 45% houses during these 5 years. Then the repayment of more or less 50% of the subordinated debt we have in our balance sheet, and also the reduction of 44% of the balance sheet. And all of this in a target for our shareholders of an IRR of more or less between 13 and 14%. How will we accomplish these targets? Well, we think that exploiting what we think are our advantages or competitive advantages. And we think we have 3 competitive advantages versus the sector. One is the extensive portfolio that we have. As I told you, we have more than 200,000 assets in our balance sheet. We have, I think, that everything. We have houses, we have hotels, we have offices, we have performing loans, non-performing loans, whatever you can imagine. We have one of those in our portfolio. And we have flexibility, and I mean flexibility in everything. I mean, we have 15 years to divest, and we can rent the assets, we can sell the assets. The only thing is that when those 15 years come to an end, we have to divest everything from our balance sheet. So if we think that right now it's better to rent, I don't know, imagine a building of offices, we will rent the building, but we will not but sell that building.
I think you told me that you had a 200 million euro portfolio coming up for sale. Was that right?
Well, we are working in several portfolios, and really in the short run, we will have a portfolio of more than 200 million in the market.
And we're talking about 6 months? Do you know?
No.
Not yet.
I can't tell you the exact date, but in the short term.
Okay. That's very helpful. So if I want a beach house in San Sebastian, do I come to you?
No, if you want to buy just a house, you have to go to one of our servicers, and for sure they will sell you a very nice house. Probably we have one in San Sebastian for you.
Okay, thank you. I wanted to ask Jaime now. We spoke of a couple of themes related to this. You were telling me that you saw a lot of interest from major investors in distressed assets across the board. And we also spoke about the pricing and how this is working. Can you tell me a little more about what you're getting from your clients and what you're feeling and what they want and what opportunities you see for investment?
Yeah, thanks, Agustino. I mean, this is the probably the most attractive thing we see in Spain right now is the sale and of distressed assets, because we're going to have so many people willing to get rid of assets. Sareb is one. We have the banks. We have the regions. We got no cash. You got the town halls who have no cash. The government. Even someone who wants to sell his own car or something, you know, there's going to be a huge market, and actually, I think internet is one of the things we follow a lot. Like Sabadell probably website is probably one of the best I know, and I mean half of my office every day I see them watching the properties for sale in Ibiza, and you know they are, 'cause some of them are quite cheap, especially if you compare with other places. But on the distress debt, we think this is a vital element really for the recovery of Spain. The U.S. market, one of the main reasons why it touched bottom is when we started to see the distressed buyers buying RMBS, CDOs, covered bonds, you know, structured products and real assets at the bottom of the market. We think it's a matter of pricing. It will come down to that really, because we did last week we organized a conference call with the IMF and the 50 of the biggest distressed funds in the world were there. And the main issue they had is there is no paper, so there is no supply, and the only reason there is no supply is because there's a mismatch between expectation, what people want to pay for these assets and what banks want to get for these assets. The only way you fix this is by forcing the banks to take more provisions, unfortunately, but that's what it happens. With 27% unemployment, it's difficult to see who's going to buy the next flat, so either it's cheap and you sell it to some Norwegian guy who wants to play golf in the coast, because there's a few of those, or it will be difficult. So I mean, we see that, but the good thing is we do see a clearing price. This is a big difference between what we had before. The clearing price, which is for us is the vital element of the recovery in Spain. The problem is we have big discussions, and I don't know what Jordi and Fernando will think about this, obviously. But when we went around the coast 2 months ago with some investors, and we did see a lot of assets being sold below construction cost, which means they were being sold the negative value of land. And this is not what is reflected on the bank's balance sheet. This is not, and this is one of the reasons why we don't see more transactions. Again, we think it will be just a matter of pricing. There's an enormous amount of demand. Spain is the #1 target right now for distressed funds in the world to buy assets, and I would take advantage of that. I mean, I would better do this than wait for another 5 years, having a very painful recovery. Because this has been reflected, by the way, in what SMEs pay and what the people on the ground pay. And but anyway, that's what we think. Again, I'm sure there's going to be some.
Well, I mean, I love a good discussion. So why?
Now, let me go back to a point that you made before, and I wanna this to be clear. I think that the point that you made before about the big cleanup, and you are following on that now, it's the wrong diagnosis and the wrong instrument. Why is the wrong diagnosis? Because the problem of the banking system of Spain may be a problem of lack of capital and insufficient recognition of losses in some specific institutions. So it's a selective problem. It is not a general problem. That's why I say it's a problem of diagnosis. It's a matter of triage. It's a matter of making sure who is weak and is going to be even weaker, and who is strong and fully capitalized. So that's why we have a problem of diagnosis. And then why it's the wrong instrument? Because it's wrong to say that in Spain and in Europe in general, we can use TARP or something like TARP and recapitalize across the board all the banking systems, because we don't have a single treasury like the US has. While we don't have resolved the issue of banking union and some fiscal backstop for the whole banking union, it doesn't make sense to go ahead with a recapitalization, because where is the money coming from? Is it coming from the public sector, which is weak in certain economies due to the unresolved sovereign debt crisis? That's why I think that that sort of diagnosis is non-informative, because the problem is, I admit, that some banks are weak, but that's a problem of selective intervention. And through the guidance of the IMF, the ECB, and the European Commission, this is being executed. And as Mr. Malo said before, and I also stressed, this has to be completed. That's the first thing. If you do that, you already reduce capacity and you recognize losses in particular parts of the banking system, which will help the process of adjustment that you were referring. And let me also mention something about distressed assets. We've been having visitors in Spain of people looking for distressed assets for investment. Now we have medium to long-term investors too. I was in Malaga 3 days ago, and we just got to a deal with a foreign investor which is acquiring a full development for renting over a few years with the possibility of selling with capital gain, say in about 8 to 10 years. We also have that type of investment. There might be distressed assets, but there is also the possibility of investors which look at quality and look at long-run investments, targeting people in the north of Europe that want to enjoy the quality of services and the sunshine of the south of Spain. So sorry if I was a bit strong on the issue of the recapitalization, but I'm quite concerned because this, for Europe, can be a substantial macroeconomic mistake because we don't have the tool. I think it's incorrect, but if we had the tool, I wouldn't mind, because then you do a full recap with funds of an European treasury. But we don't have that. So we have to be more innovative and think of other ways of doing it.
But just one thing to point out, again, Jordi, there is money available from the bailout for Spain. There is a couple of billions left, over 40, and which can be used exactly for that.
60 billion.
60 billion.
But even if you don't use that, and you're talking about real estate, I'm not talking just about real estate. The opportunities go well beyond real estate. We're talking about a problem of debt in the Spanish corporates. A very easy way to get rid of that debt is selling some of that debt. And some corporates will find it easy. People are not always paying 10 or 20 cents on the euro. Some people will be ready to pay 80 cents or 90. If it's a good quality asset, a good quality debt, they would pay more. But we think the things like changes in the local bankruptcy regime would help a lot. Things like the personal bankruptcy regime would help a lot. And very easy things that can be changed. And this should be changed. It should be a priority. What I'm telling you is exactly the feedback I get from all these investors. And tell me, I mean, I know we disagree on some things, and obviously we want everything done today. The problem is capital. You need the money to do it, which is not easy. But what I do know, and we talk to all these guys, is if you do this, a lot of money would go into Spain, and that is very clear. And right now, if they don't do it, we're just going to delay, and we'll see other countries following. This is the feedback we get firsthand from all the biggest investors.
Now,
that's it.
There's always, I think the oldest problem in economics is probably what a buyer wants to sell for and what a seller wants to buy for. So it's natural that we see maybe this discussion right here. I wanted to give a little time to the audience in case there's anybody that has a specific question for anybody sitting on the panel. Is anybody? We have a question right here. I don't know if we have a mic. Maybe I get you this one. Here you go.
Thank you. John Camacho, JC Strategic Advisors. I have a question for you guys. The banking,
Yeah, louder. There we go.
the banking facet that you guys are going through, Spain is going through, it has some similarities with the one that we had here with savings and loans.
Right?
With savings and loans.
SML.
Way back. Now, two things. Are you guys, by consolidating all these banks, are you running into the problem of too big to fail, number one? And number two, if the banks are too big to fail, is the European Union going to bail them out again?
Thank you.
Now, if I may,
Go ahead,
on
yes.
this issue, The Spanish banks, the two largest ones on total assets are Santander and BBVA. They have internationalized and diversified, so they may start to be too big for the Spanish economy. After the process of consolidation, CaixaBank and Banco Sabadell will become also large.
Thank you.
Sure. But we have to look at the size of those banks relative to the EU GDP. And that's why the process of constructing the European Banking Union is important. If you look at our bank, I think in the Eurozone already ranks number 8 or something like that in terms of market capitalization. So we may be large relative to the domestic economy. We are not large relative to the integrated European banking industry. And I think that with the single supervision mechanism starting in Frankfurt in the first term of 2014, and with the single resolution mechanism that has to be approved, at least the proposal has to be tabled by the European Commission this summer, and we hope it will be approved by the Council soon. With that, I think that we will have the tools to have a real single banking union where our size will not be too big to fail. I think that the problem of too big to fail, it's much more important in the United Kingdom, right? Thinking of the United Kingdom and the UK as a country which is not within the Eurozone, although it may be affected by the single supervision. For the UK, yes, there you have a problem of a country which has banks which are quite big for the economy of the country.
Any other questions? There's one in the back. You have a mic? Yeah.
Yes, I enjoyed the debate. My question is regarding your comment that the issue is a group of small selective financial institutions who do not have enough capital.
Can you speak just a little bit louder and say the question again?
Can you hear me?
Yeah, we can hear you.
My question is regarding your statement that the issue is regarding a few selective institutions in Spain that are not well capitalized as opposed to the general system overall, and that is why you're anti a TARP approach. And I guess the same could be said was true in the U.S. Not all institutions were weak in the U.S. Financial crises need confidence to bring new capital in, and that was what was effective at the approach in the U.S. So notwithstanding that, maybe you could clarify your point as to why a TARP would not be effective, point one. Point two, while there is no European-wide treasury, I agree, and you say that it's a macroeconomic problem for all of Europe because of lack of capital. I would argue that you could argue that delaying the cleanup would also be negative given the unemployment and political environment that would deteriorate if you delay the cleanup for another 5, 10 years, et cetera. So maybe you could address those 2 points.
If anybody wants to take it, or I think it's directed to you, Jordi.
Yeah, I will be quick so that the U.S., can you hear me? The U.S. not only had TARP and a single treasury, the U.S. had 2 additional instruments which were very useful and we didn't have in Spain or even in Europe. The U.S. had the FDIC, the Federal Deposit Insurance Corporation, which has closed many small banks, and a good system to determine what's systemic and what's not systemic. And the intervention of TARP is because it was clear what was systemic and what not. In Europe and in Spain, thanks to the crisis, we are developing those tools. We are determining how to close a bank, okay? And we are determining or trying to determine when a bank is too big to fail and what to do about it. On the second issue of cleanup, I didn't have time to say it before. Our forecast in terms of the consolidation, the closing of branches, the reduction of employees, and the reduction in costs is about 12, 15% more than what has been done already today in terms of branches and employees, which means not that we go back to 2004 or 2003 before the bubble. We go even beyond that. It means that we are streamlining our financial system to sustain a level of business which is much lower, with a level of margins which is going to be quite tough. So cost reduction is an imperative for the Spanish banking system and is on its way to be able to be efficient for that level of activity that we anticipate.
If you allow me to make a comment, building on what Jordi said and clarifying some of the things that Jaime said, I wouldn't think it's fair to say that there is a lot of cleaning to do, or it would seem that Spain hasn't done a ton of things. The restructuring process that the Spanish banking system went through, there hasn't been any other country in the world that has been going through that. Just when we look at 2012, early in 2012, we had two real decrees that made Spanish banks to increase exponentially the amount of allowance for losses for anything that smelled like real estate. Then we went through a top-down stress test done by two consulting firms. Then we signed a memorandum of understanding with Europe. Then we had the stress test performed by Oliver Wyman. That was a bottom-up, bank by bank, and very strict, with a very stressful scenario, pessimistic scenario. And out of that stress test, a few banks, among which we have Caixa and Sabadell, passed with flying colors, even in the worst-case scenario or in a very pessimistic scenario. So to say that there is a lot of cleaning to do, I think could get the audience to get the wrong message about everything that has been done. When we just look at from the pure numbers perspective, Jordi mentioned before the reduction of capacity. That reduction of capacity, as of today, it means 30,000 less employees in banking and 6,000 less branches in Spain. Obviously, anybody that visits Spain, and I run an American bank, and when an American citizen visits Spain and goes to the wonderful city of Barcelona, sees that in every other corner you have a branch of a Spanish bank. And that is true that we had overcapacity. That overcapacity, the truth of the matter is that was driven by the expansion of the savings banks. Many of those that today have been merged or absorbed because they tend to expand outside their region. And when you look at the number of branches of banks in 2000 and the number of branches of banks in 2012, the number is not that different. The growth of number of branches was driven by the expansion of the savings banks. So because we are going from 45 savings banks to 11, part of that excess capacity has already been taken care of, and it will keep being taken care of. Also, in terms of being protected for additional downturn, just when we look at the group of banks that passed the stress test, the zero group that was called by Oliver Wyman, just those banks in their business in Spain have provided for allowance for losses more than 78 billion euros that is in the balance sheet of the bank. So even if there is an additional adjustment in price that there will be, we have plenty of provisions in the balance sheet. So we are convinced from the banking perspective that even though there will still be an adjustment in pricing in the real estate, and it's necessary, that the balance sheets of the banks are able to take that, to absorb those losses. Just to give you an example, the allowance for losses, or the provision that we have for land, is over 80%. So it's true that the price of land went down significantly, but we are covered with 80% provisions. So just to make the point that we are in better shape than
we're almost out of time, so Marta or Jaime, do you guys have an opinion on the issue that you'd like to express?
Just very briefly, I don't want to come out of here saying Spain is horrible, because it's not that. That wasn't my idea. A lot of things have been done, and it's true. And what we say is, it's the only country who's doing this. We cover all global banks, so we follow all the countries. And And obviously someone has to be pushing, and we like to, we like to be the annoying kid in the room that said what needs to be done. And, but we do appreciate all this. Investors know it. And it's just a matter, again, when we say it's a matter of price and provisions, it's a gap, and that gap closes. And when does it close? Well, it's basically up to the banks. If they want to take the whole adjustment today, we start the recovery today. If they're going to take it in 2 years, we wait 2 years. But we do think that a lot of the things that have been done are pretty much like a scenario for other countries to follow. I mean, in terms of the structural reforms that have been done, if only unemployment was better. And the last thing I would say, Agostino, is that there's a lot of very good people in Spain. If you want to hire new guys here, there's a lot of companies here present. And we are hiring new people in London from Spain. And why not? You have to tell people to hire them. But as I say, we don't think it's native. We think a lot of things have been done correctly, and just a little bit left. And that's it.
Spain's the new China, huh? No, I'm kidding. Okay, well, thank you, everybody, and thank you, panelists. This was a great discussion. Thank you.
Thank you.
Muy bien.